We will talk next with Charles Gradante. He is an advisor to hedge funds. He is from Hennessee Group, and we'll talk to him about what's going on in this market. Stay with us. Well, it's been another tough day, as we mentioned. How are hedge fund managers, though, dealing with a market faced with an expanding conflict in the Middle East, rising energy prices, and falling stocks? Joining us now with some insights is Charles Gradante, managing principal at the Hennessee Group. The Hennessee Group is an advisor to hedge fund investors. He joins us in studio. Thanks for joining us today,
Thank you,
Charles.
Monica, for having me.
Interesting day. There seems to be, as Michael Steinhardt put it when he came in a couple of days ago, a pall over the markets. He said at the time it wasn't justified, but I'm wondering now, when you see all the events that we are seeing going on around the world, is it justified?
You mean the
sort of this pressure that we're seeing on the markets and the negative sentiment?
I think Michael, and we know Michael very well, he's a value investor, and the market is fairly valued. There are certain sectors that are undervalued and other sectors overvalued. I think Michael is seeing a lot of valuation. But the volatility we're seeing in the market, especially today, is all news-driven. So we have a market that is somewhat news-driven and not earnings-driven. We like to believe we're an earnings-driven market, but we've gotten some good earnings reports, and the news have overshadowed that. So
yeah, and not such good earnings reports as well from the bigger names.
That's
is
right.
That a concern?
That's a concern, and hedge fund managers are a little bit perplexed about this. They're consequently, and even today as we speak, they're narrowing their net exposures to the market. The concern is that now we're retesting the low that we hit, I think 10,007 on the Dow. We might be having a double bottom. If we hit that double bottom and bounce back up, that's positive. If we go through 10.7 on the Dow, that'll be negative for the market.
What's the biggest challenge, I guess, now facing what we are facing, a news-driven market, higher energy prices, and we may not get past these issues anytime soon?
No, and one of the concerns we have at the Hennessee Group is that the Fed may not have the tools to control inflation, because normally inflation in this country is driven by U.S. consumers demanding in excess of supply. The inflation we're experiencing now has nothing to do with U.S. consumption. It's all Chinese consumption. And the Fed has no control over what China does. So raising rates in the U.S. will not slow down inflation. So the concern hedge funds have is, we've got to slow China down, and the only way to slow China down is through negotiations, which we're trying to do. If they don't slow down their economy, it's conceivable that they will force the G7 to raise rates to a point that could cause a global slowdown beyond what's currently in the forecast.
So you think that's the bigger backdrop than the day-to-day news?
The worst case scenario is China says, screw you guys, we're still going to build out our infrastructure and demand oil and demand metals, and we're going to allow these prices to rise up. We can afford it because we have a great dollar, and if you got to raise your rates, that's your problem. That's the worst scenario. Okay,
Charles, we're going to hear more about maybe the best scenario when we come back. You're going to join us for another section. Again, Charles Gradante from Hennessee Group will be along with us, and we'll continue to talk about what happened with hedge funds last month. How did they perform? Talk about the winners and the losers. Stay with us. We continue our conversation about the market and hedge funds with Charles Gradante, managing principal at Hennessee Group. Charles also was the only non-government person to appear before lawmakers on the subject of hedge funds, which is a very hot subject. So thanks for you sticking with us again, Charles. Let me ask you about the performance, as we mentioned in the tease, in June of the hedge funds. What did we see in terms of performance? Who were some of the big winners and losers in their strategies?
Well, in June, a well-balanced hedge fund portfolio was flat to slightly down. The big winners were merger arbitrage and short-only managers. Both strategies are short volatility, not to get too technical, but they were short volatility. And options traders who sold calls during June made money. As far as who were the big winners, there weren't really any big winners. The strategies that were up 50 basis points. So it was a real tough month because, as I said earlier, the Dow went from 11.2 to 10.7 back to 11.2. So everybody was sort of like holding their own.
Do you see more of the hedge funds, and maybe as we go through some of these headlines, or even from June, moving more to cash?
Yes, we're seeing a little bit, especially now at an event like today, more moving to cash or putting on S&P puts. Those would be the two strategies.
Let's talk a little bit about some of the inflows and outflows, with it being, maybe sort of not such a great month for the hedge funds. What did we see in terms of the inflows then?
Well, for the second quarter, we've seen $25 billion of money inflows. I don't know what it was for June, but for the entire quarter, it's $25 billion.
Put that in perspective.
Well, we're talking about a $1.2 trillion industry, so $25 billion. It probably is one of the better quarters that we've seen in the last 4 quarters.
Let's talk about sentiment from the hedge fund managers in terms of the economy. As you mentioned, the growth in China, but overall, what are they thinking about the U.S. economy?
The equity managers are generally bullish about the economy. The bond managers are kind of bearish about bonds, but the equity managers are bullish about the economy. They think GDP will come in around 3%. The fear is that the Fed will overshoot their mark and cause a greater reduction than 3% in GDP. Interestingly, Bernanke's got his first Humphrey Hawkins speech coming up July 19th, and a lot of the hedge fund managers think that may be a pivotal speech for the market, putting aside oil and what's happening in Israel. The China situation is another big issue.
So do we see a different setup then ahead of that meeting, ahead of that testimony?
Yeah, I think people will get a little bit more market neutral, or neutral to the market, more shorting of S&P or being long S&P puts ahead of that speech. And but they generally are bullish. They feel that Bernanke can pull it off, but they're not sure, since many of the events that are moving this market are outside. Look at today. I mean, and it's just amazing what's happened. It's really a news-driven market, and the hedge fund managers are focused on the news right now and not knowing what the news will be. They're just sort of flattening out.
Okay. Thank you, Charles.
All right,
Appreciate it.
Thank you.
All right. And Charles Gradante of Hennessee Group joining us. An update of world and national news is next on Bloomberg Market Mover. Stay with us.